Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's February 4th. Some of you might be surprised that you got to notice that there was a chart lesson today, but I made a mistake on my doctor's appointment date. It's not till Thursday, so we'll be here Monday, Tuesday, and Wednesday, and then we'll take a little longer break. I usually don't do them on Friday. Chart lessons on Friday anyway, so it won't be one Thursday this week either. So. Um, Hopefully, I didn't throw too many of you off too badly, but I just had looked at I had the dates wrong. For some reason, I was thinking it was today, and it's not till Thursday. So, anyway, not a lot of trades today. We had a nice little trend here, and there were some great setups here early on that you could catch here, and you might even catch a runner on a couple of these. But there weren't a lot of trades. There's not a lot of volatility. Things have slowed down a little bit. But just remember you only need two or three trades, good trades a day to really make a good living doing this. So, most people think that before we get started, I'll just say this. Most people think that, you sit here and you trade all day and you take trades over and over. The key is not to take a lot of trades. The key is to be able to find one to three really good trades every day. And if you want to make more money, you increase your leverage. Once and you got to do that slowly. That's one thing that people they think, well, if you can do this and make 1 point on a single scalp of a single contract every day, why can't you just scalp 100? Well, you could, but here's the issue with that. There's a mental aspect to trading. That's just simple as that. And when you got 100 contracts all sitting there live, trading live, and it moves even 1 or 2 points against you, it takes some intestinal fortitude to sit there and watch that. And so, really, what you have to do, you have to build up, and it takes much longer than you think. And you'll probably get to a point where there's a X number of contracts is probably the most you'll feel comfortable trading. And for me, I've never wanted to trade more than 20 contracts at a time. Anything more than that, and I'm just not comfortable with it. And I don't need that. I can make a good living trade. You can make a good living trading 5 contracts, um, and getting a couple of trades a day. You can make a good living doing that. And people think this is a get rich quick thing, and it's not a get rich quick. If you come at it with that attitude, you're going to fail, and you're going to be sorely disappointed. But if you come at it like you want to make a salary, and you can do it consistently, eventually you can get rich, but it's not a get rich quick type deal. So it's a slow build. And so anyway, didn't mean to get off on a tangent right out of the gate this morning, but or this afternoon, but I did want to mention that because I've gotten a few questions on that lately. So the idea is to find 1 to 3 trades every day, and you might start out only making scalping one point on one contract, and that might be all you need every day. I had people say if I can make $100 a day, I can live good. And it depends on what part of the country you're at or what part of the world you're at. In some part of the world, 100 American dollars a day is a lot of money. So you can live like a king off that in some places. Some places that barely get you, won't even get you out of the poverty level. But if you can consistently make $100 a day, at some point you'll be able to build up and you can consistently make $500 a day or $1,000 a day, or you might even get to make $5,000 a day. But it takes a little time, and there probably will be a point to where you just really can't increase your leverage much more because you just can't handle the the stress of it. And the same thing, when you first start trading, some people can't handle the stress of trading one contract, much less 100. So, just don't, it's not as easy as some people think. So I've had that question asked me, why not just take one trade a day and trade 100 contracts? Well, I'm not comfortable trading 100 contracts, and I make too many mistakes because the monetary value just, it makes it difficult. And it will, so you'll see that as you start to trade live. And some people might be able to trade 500 contracts, but I mean that's really getting out there. I mean that's pretty far fetched to be honest, unless you're trading for other people or whatever. I don't see any need to ever trade that many contracts. But you might say, hey, I've got a big enough account and I want to make one trade a day and trade 100 contracts, and you might live large. So just keep that in mind. But the other thing to keep in mind too is that the runners really change the math. If you can scalp 1 or 2 points a day, and then a couple of times a week catch a runner that gets 3, 5, maybe even 10 points, those extra points from those runners will really improve your math and really add to your bottom line. So keep that in mind. But anyway, let's talk about the trades. We started off in this trading range, or it looked like it was going to be a trading range. Um, you can see the overnight highs were here. The overnight lows were here, and we had a little, looked like what's going to be a little failed break lower, and that's what happened, and we headed back to the top, but we just kept going. And you can see we closed well above 2,700 today, almost 20 points. And that's something to notice, that we're right around that 2,700 mark again. We've traded back up after a sell off at one time, and you can see how we're kind of going sideways the last few days on each side of that, and that's pretty normal. Those 100, 2,700, 2,800, 2,900, so forth, those are very emotional levels, and prices will usually trade both sides of that for a little while. And you might push through, and you might fall back below, and you might push through, or you might hit it and sell off every time, or you might trade down to it and bounce every time. So just keep in mind that those are very emotional levels and very emotional areas, and so sometimes it takes a while to work through those. But anyway, let's back out here. You can see we were going sideways, and it looked like, and there's a little two-tier channel working here. You would think that we would probably try for a retest, but I think at this point when it went higher, I was looking at a range day. But now that the day is over, I really think it was more like this. And you can see that it looks like we had a break here, and then we had an overshoot, and then we reversed. So that's probably more realistic. You got to the same place pretty much either way. The only thing, if you did it off these highs and then got your equal distance here, it would have helped with this couple of these trades here. But everything else was still kind of working out anyway. So I mean, I didn't see any trades there I really liked. Regardless, but that was something to look at. So but in the end, I do believe it probably was more. This would have actually just started from up here. I believe it was more like that right there. And you see your midline still stays the same. And then this way you got your break, you got your overshoot, and then you reversed. So anyway, like I said, doesn't really matter which way you saw it. It pretty much worked. It fairly, what's the right word? I guess you could say it pretty much worked out the same either way. So I'm gonna leave it like I originally had it, because that was the way I was playing it, basically. So let me back out a little more, and we'll go through the trades. It won't take long because there's not a lot of them today. So let me back out here. We can see these bars a little better. Okay, first trade I saw was right here. It was really looking like a tight range at this point, and we'd just come off the top, and notice this new high here, and then we try to make it. This is basically a double top, and then you move down. You get a first entry, second entry. So there's like two legs back to the EMA, and so it's also a second entry short, but it's not a very good signal bar. So based on a second entry short, it's not a great trade. Now this bar wouldn't have been here at this point. Your lows would have been down here, and so you'd have had a little more room. But if you're looking at this like a second entry short, this wouldn't have been a good enough signal bar, and I'd say you probably got to skip this trade. But the fact that this is a double top up here makes this a failed second entry long, and it is right off a key entry point. And with a second entry, I like that trade. So you got enough room to get out before you get down here. And so I like that trade. And of course, where does it bounce? Right where you would expect it, down here. And it comes back, and you actually try to go higher here. So when it broke lower right here, it was again a second entry short and a failed second entry long. So really, technically, when it broke lower right here, you could have gone short, but the fact that that's almost a doji, I thought it was worth waiting. And when it broke higher again and failed and then turned and went out the other side, I like going short right there. Again, you got enough room to get out. And this time it pushes on through and goes a little further. And it does end up failing. And there's a failed second entry short right here. But you don't, it's not a very good signal bar. There's a lot of overlap right there, a lot of stems on both sides. You're right into the EMA. So I don't think you want to go long there. Of course, it shoots off like a rocket and turns out to be a good trade. But I try to tell people that doesn't matter. Just because it took off and it turns out it looks like you missed a good entry, it's not a good setup. So it's not a good trade. You did the right thing, and even though it went off without you, what you got to look at is, hey, I followed the rules and I didn't get burned, because the next time you go long right there, it'll touch that EMA and go straight down, and you'll get burned. So just keep that in mind. That's what trips people up, and they'll miss this move, and then guess what? They'll think this is a good second entry long right here because it's been going up without them, and they'll jump in, and guess what? You got burned, and that turns out to be a great short. Look at that thing. That was the trade of the day right there. And that's a nice little reversal pattern. We'll talk about that in a minute. But anyway, prices bounce there. There's no setup. It's sad that you have to watch a nice move like that, but that's the way. That's where patience pays off. Because if you're not patient and you start watching that go on, next thing you know, you'll end up going long either here or here, trying to chase this thing, and then you'll figure out, oh, that was a dumb move, and it rockets down, and you get stopped out, and you're just like, why did I chase it? So just be patient. Just because like I said, just because the setup starts rocketing off, that's not a good setup. And, just because there was a good move out of it doesn't mean you were supposed to take it. So keep that in mind. But anyway, we come up and you make this lower high here. So draw your trend line just in case. And guess what? It comes back right off that trend line and gives you a lower high. And it actually broke higher. Comes down here, closes. That's a perfect place to go short on a lower high. Where it looks like, hey, this may be a little trend line working down here, and if you drag this trend line down, it fits right down in here. Your midline's fitting so far, so hey, this looks like a nice little channel. So go short right there, and if you want to be even a little safer and wait on that reversal pattern, just to be sure, it pushes through here, pulls back, makes a failed second entry long, gives you a big bearish bar right there at that little trend line, confirms that trend line, go short right there. And that's the trade of the day so far. Boom, runs all the way down. We actually break through here. We actually broke through right here. So now we're making higher highs and higher lows, and that really makes it look like this, and it bounces right there. It makes it like, hey, this channel could be valid, but you also want to continue to think, because we're swinging back and forth above and below the EMA. That's a range type day. So also be looking at it both ways, just in case. And guess what? It makes a little double bottom here, and then you get a first entry short, second entry short. It fails. It's right there at the trend line. We'd gotten a breakout or close outside of this little short-term trend line, and it had made a new low. And so then it makes this higher little double bottom and a failed second entry short. And that's a fairly bullish bar, and it's right off that trend line. I like going long there. You may have, you might have looked at this like, hey, it's below that EMA. Maybe I better not take it. And that would be okay if you did. There's nothing wrong with that. And you could easily argue for this to be green. But even if it's you can trade this both ways because of the way we're swinging back and forth. And at the very least, we just came off the low of the channel, if I've got the channel right. And then you also made a double bottom here and then a higher double bottom. So, this is probably going to trap some shorts right here on this second entry short that failed. I mean, look how bearish that looks. It traded up and turns back down. You definitely don't want to be going short there. But when it breaks lower, and if you did, I guess what I was meant to say, if you did go short and it reverses, then go long right there. So you lose a little bit and you get it right back. And where does it go? It runs up to this trend line. Unfortunately, you don't get a very good setup. It gives you a lower high right here. Not a good setup. There is a failed second entry short here, but it's right into that EMA, and It's, that's not a very good signal bar. But if you looked at it like it's a failed second entry long, you might say, hey, that's a failed second entry long, but all that turns out to be is a short trap, really. So it reverses. I don't like going long there yet, because at this point you may still be thinking, hey, we're headed back down. But when it pushes on through, pulls back, makes that failed second entry short, this actually breaks lower, reverses, and goes right out the other side. I like going long right there. And because if this is a range day, we're probably headed all the way back to these highs. And look at it go. And it actually pulls back right here, but you don't want to go long right into that trend line. It's too risky. It pushes out, and it comes back once again. And this is basically a little double bottom right here. And so first entry, second entry, and it fails. It's right off that trend line, and it's the second entry long. I like going long there. And you're just looking for it to go right here. And that's another thing. Let me just show you real quick. This is your first leg right here. And so if you're getting a measured move, we're headed much higher. And you can see we had a little resistance right there, and boy, we went higher. So, and there's also, I would call this your first leg down. And so you were looking for a measured move here, and you can see we basically got a perfect measured move on that coming down. So that would have given you a target there as well. But anyway, nice long there. It comes back and it bounces off that trend line again. But it's right into those overnight highs. And if this is a range day, we may turn down. So you can't risk that. Works on up here. Again, you're right at the support resistance. Not a good place to be going long, because if anything, it may fail out of here. But notice what happens. You make a double bottom, it moves up. First entry, it moves up, and then you get a second entry and it fails. And look at that bearish, bullish bar right there. And it's right off the EMA. And that's a second entry, because you're coming back, you get a first entry, then you pull back, you get a second entry. I would have liked it better if it broke lower. It didn't, but it's still a second entry. So that's probably a pretty good place to go long. And that's the reason I made it green, because it's not a perfect setup. But I would watch that swing right there in case this is your flatter channel setting up. And then you kind of chop around up here and make a new high, and then look at it come back. First entry, pulls back, and you get a second entry long right there. Nice bullish bar. Okay, I had a little interruption there, but I think we were talking about this trade. It moves on up, makes a new high, and then pull back. First entry, pull back second entry. You do get another close outside this flatter channel here. So you could make a new high in reverse. So you got to be real careful trying to get long after this point right here once you've made a new high. And notice how it moves up, and that's just a first entry. So it's a first entry to the short side, and it's the first entry to the long side, and you've already made a new high. So I don't think it's safe to go long, even though that's a fairly bullish bar, but this is really your signal bar, and it's just too I mean, there's 3 ticks in it, and it closes 2 ticks in, so it's more of a bearish bar, but it is a really small bar. And that's one that you could say, hey, that may be worth risking to the long side, because it's been a pretty nice trend up. And so it's a possibility. We'll just leave it at that. If it was a second entry, I'd say, hey, you may take that. But what I really like about it is that it's just such a small bar. It's very low risk. So, even if you got your buy stop right here and your sell stop 1 tick below, and it breaks higher and you're wrong, you've only lost 3 ticks or so there. And if you get it right, it's probably going to push on up to a new high, and you might even get another leg like that one. So you can see it got much more than another leg. There's your first leg up, and so then you get to your correction, and a second leg puts it way up here, but we went a little bit higher than that before it sold off, and that got you into the 2 o'clock hour. There's actually one more possibility right here. I didn't mark it because it's an inside bar and that trend line is still in play there. Notice you get your break and you try to go lower, and you actually just keep chopping along here before it does push higher. And this would have been a great second entry long right here if it wasn't, almost 2 o'clock or almost 3 o'clock rather. It's just too late in the day, and you can see how it pushed on up. That was I mean, you could have ridden this all the way up. So that was a nice setup right there, to the long side. But anyway, that's what I saw today. And I did want to say one other thing. Somebody asked me, and I get this question from time to time, when is a good time? When is it okay to buy on a first entry? Well, generally, you always want a second entry unless it's a real tight and strong trend. And this is fairly tight, but this is not as, generally the kind of channel that you want to see where you're only taking first entries is where it just keeps going higher and higher, and you get lots of little bars and dojis. It's those strong trends. They don't look like it, but the trends would be more like this right here, and they just keep going and going and going. And as you see, there's not room in there for a second entry, really. Imagine that this tight channel starting way down here and just keeps working and working and working. Well, that's when you want to, you have to take if you don't take a first entry, you'll probably never get an entry. This is not, I mean, this is a fairly strong trend up, but this is not the kind where you see, and all the corrections are very, only correct a tick or two, and you'll see them. It's real tight like this, except everything's in the trend line too. It's actually tighter than even what I've got there. It's usually more like, like that right there. And you're not getting out of the trend line. It's bouncing off that trend line. And you get lots of little stems on both sides, and it just keeps going higher and higher. All your little corrections barely come back a tick or two. There's just not any much of a correction. That's when it's okay to buy first entries. You still want to use your signal bar to help filter your trades, in my opinion. But that's when you'll get those strong trends, and you won't get anything but first entries. And so if you're waiting on a second entry, you're going to miss some really good moves. So I hope that answers that question for the person that was asking it. But anyway, all right, I'm going to wrap it up today. 22 minutes worth. I talked too much at the beginning probably. My goal is always to keep these things at 10 minutes, but I never can do it. I talk too much, or there's too many trades or whatever. So, but anyway, I don't want them to be so long that, they get boring and people get distracted and all that kind of stuff. 10 minutes is a good learning period, enough for most people to go through the trades on an average day, but I'm having a hard time with that 10 minutes, so don't hold it against me. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.